Yo, what's good, my people? Welcome. This is First Sound Effects, the home of blues. So, today I'm going to share with you the Forex course. And now let's get started. Ready. So, the first thing you will need to ask yourself is what is Forex trading? Forex trading in simple terms is just the global financial market that allows one to trade currency. So we usually have pairs. We have the NZD, Swiss franc, for example, the US dollar against the Japanese yen, the euro against the Great British pound. Name it. So uh, for you to start trading, for example, let me talk about currently we have the NZD Swiss. So that means that if you think that one currency will be stronger versus the other and you end up being correct, then you can make the money. So if you think the New Zealand dollar is stronger than the Swiss franc, so that means that you can take a buy against the CHF, that is the Switzerland franc. Yeah. So um second question is, how do we trade this forex market? you know how do we trade the forex market? Now that we know that forex is just the foreign exchange, or like I say, it's a global financial market that allows one to trade currencies. Great. So um how do we trade uh this currency, or how do we trade forex market? So you will need to choose your pair. That is now the pair that you need to trade. That, for example, the NZD, Swiss, Euro, GBP, Euro, I mean, the list is so long. So just need the list. I mean, you just need the pair that you need to trade, and then now the analysis. We have the technical analysis, the fundamental, and we will be covering each. Yeah. So and then another question is, when can one trade? When can you trade? So let me just a minute. Just in order not to forget, in order not to get I mean in order not to forget my checklist. Let me go back to my reference list in order just to give you each and every point. So when can you trade forex? Okay, we have different sessions. Yeah, we have different sessions in forex market. We have the London, we have the New York session, you know uh Asia session. So before looking at the best time to trade, we must look at what a 24-hour day in the forex will look like. You know, the market can be broken up into four major trading sessions. Like I say, we have the Sydney session, Tokyo, London. And traders often focus on one of the three trading periods rather than attempt to trade the market 24 hours per day. You know, so the session, we have Asian, Europe, North American session, which is also called the Tokyo and London, New York session. No, so you just look for the best trading session that fits you. Because some traders prefer to differentiate session by names of the continent. Other traders prefer to use the names of the cities. Since the New Zealand is a major financial center, the forex market opened there on Monday morning, while it is still Sunday in most of the world. Even though trading starts in New Zealand, it's called the Sydney session. Makes no sense, but we don't make the rules. So until Friday, there is no time during the week when the market formally closes. So although there is a brief lull activity between 7 and 10 GMT, when most American traders have gone home and most Kiwi and Aussian traders are getting ready for work. Other than the weekends, there are just two public holidays when the entire forex market is closed. That's the Christmas and the New Year's Day. Yeah. So actual open and close times are based on local business hours, with most business hours starting somewhere between 7 to 9 a.m. local time. All right. That being said, so that is when should trade the forex market. So it's just Monday to Friday. Then now you choose the time frame. I mean the session that you need to trade. That the Asia, be it London. Great. So those are just the introduction. Now the forex market has something. We have something called the margin trading. If you open your MetaTrader 4, you will see margin, equity, balance, such things. But that I will make another video teaching you how to use the MetaTrader 4 and how to use the Trading View channel. Okay. So let's start about this margin trading thing. So first question is, what is margin trading? So the biggest appeal that forex trading offers is the ability to trade on margin. But for many forex traders, margin is a foreign concept and one that is often misunderstood. Margin trading gives you the ability to enter into position larger than your account balance. With a little bit of cash, you can open a much bigger trade in the forex market. And then with just a small change in price moving in your favor, you have the possibility of ending up with a massive, huge profits. But for most new traders, because they usually don't know what they're doing, that's not what usually happens. More likely, price does move, but it moves against them. So one needs to understand how the margin works. Because a lot of new traders do not understand the concept of margin, how it is used, how it is calculated, and the significance that it plays in the trading career. Okay. So what is free margin? What is free margin? What is margin level? And what is a margin call? What's a stop out or a margin closer? So as you can see, there's a lot of margin jargon used in forex trading. Before you choose a forex broker and begin trading the margin, it's important to understand what all this margin jargon means. Great. So if you really want to understand how margin is used in forex trading, you need to know how your margin trading account really works. This starts with understanding what the heck some numbers you see on a trading platform really mean. Well, call these numbers your margin accounts, the metrics. So that's what I was talking about: the equity, balance, the margin level, use margin, the free margin, or unrealized profit or loss. As a trader, you need to be aware of the relationship between them before ever entering a single trade on a live account. Make sure you have a solid grasp of how your trading account actually works and how it uses the margin. So let's get started. A margin trading account displays the following. Like I said, a balance, use margin, free margin, a realized profit or losses. We have the equity or the margin level. So a metric is just a measurement of something. This means that every metric above measures something about your account involving margin. For example, the balance measures how much cash you have in your account, and if you don't have a certain amount of cash, you may not have enough margin to open new trades or keep existing trades open. Depending on the trading platform, each metric might have slightly different names, but what's being measured is the same. Good. Now if you take a look at the metrics on MetaTrader 4, you'll notice that it looks like that used margin is not displayed, but it's there. MetaTrader 4 just displays it as margin. Good. Now let's discuss the metrics one by one in detail. Good. Detailed form. What is account balance? So account balance, in order to start trading forex, you need to open an account with a retail forex broker or a CFD provider. Once your account is approved, then you can transfer funds into the account. So for you to enter this market, you need a broker. There are so many brokers, but now if the broker that you need to choose must be regulated, so choose wisely, you know. So the new account should only be funded with risk capital, which is cash you can afford to lose. Yeah. The account balance, or simply balance, is the starting balance of your account. Basically is the amount of cash in your account. Your balance measures the amount of cash you have in your trading account. You know, if you deposit $1,000, then your balance should be $1,000. If you enter a new trade, or in trader lingo, open a new position, your account balance is not affected until the position is closed. You know, this means that your balance will only change in one of the three ways: when you add more funds to your account, 2, when you close a position, or 3, when you keep a position open overnight and either receive or pay a swap or a rollover fee. Since the topic is about margin, the concept of swap and rollover aren't related, but for thoughtfulness, we quickly describe it, since swap fees do affect your balance. Just know that there's a difference between a trade that lasts a couple of hours and a trade you keep open overnight. Nice. So most brokers perform the rollover automatically by closing any open position at the end of the day, while simultaneously opening on identical position for the following business day. During the rollover, a swap is calculated. What's swap? A swap is a fee that is either paid or charged to you at the end of each trading day if you keep your trading open overnight. Nice. So now let's now move to the analysis, away from the theories, because now forex is typically practical, no theories, away from the theories. That was just an introduction. So we have analysis, forex analysis. Yeah, forex analysis. We have the technical analysis, the fundamental analysis. So I'll be breaking them down each, one by one. Excuse me. Okay, so let's start. Let's begin with the fundamentals, the fundamental analysis. Let's begin with the technical analysis. Let's start with the technical analysis. So when we talk about technical analysis, just a minute. As you can see the screen over here. So technical analysis means you just analyze them technically with the price action. When I talk about price action, that is what the market is doing currently. So you analyze the market according to what you see, what is happening currently. Okay, so we have different time frames. We have yearly, we have the ranges, monthly, weekly, 4-hour time frame, 3 hours, 2 hours. We also have 1 minute, 1 second, but we're not going to deal with that. So currently we're just going to use the weekly, daily, 4-hour, 1 hour, 15 minutes, 5, and even the 1 minute time frame. Nice. So there are patterns that usually form. This forex market. So let me look for something. So forex market, the market moves like a wave. It goes up, boom, comes back, goes up, comes back, goes up, comes back, and vice versa. that. So that is how the market moves. So we do call these, let me, okay, sorry about that. Let me draw that again. Brother, okay, let me just do this. Let me just do this. Good. So this is called a higher high. You know, the market creates a high. So this is a high. No, it's called a higher high. So when it moves down, now it breathes. Now when the market breathes back to this zone, now we call that a higher low, right? Sorry about that. So this zone is called, the peak is called a higher high. Then now the retest zone, that is when it breathes, is called a higher low. So the market moves up, creating highs or higher high, then now goes back, or it breathes, creating a higher low, continues back, creating more higher highs, higher lows, higher highs, higher lows, higher high, higher lows. And now when we come back, when the market starts dropping, now let me show you. Good. So now it creates lower lows, that is called the lows. Now then when it comes back, let me do this, and then that. Good. So like I said before, this is called now the low or the lower low. Then when it pulls back, is now called lower high. So this is lower low, lower high. Remember this, the previous one was higher high, higher low. Now this is lower low, lower high. Okay, lower low, lower high, lower low, lower high, just like that. So that's how the market moves. So how do we make entries? Okay, so despite everything, the market forms something called the support and a resistance. Support, resistance, support and a resistance. So let's explain this in a layman's language. Support is something that supports you, like now where you're seated or standing, the ground supports you. So now we can call the ground lower ground, like this line I drew down here. Now that's the support, now when you look above, maybe let's say you are in your house, the ceiling up above, now that is called a resistance, because when you try jumping up your ceiling or your car ceiling, you can hit your head, now because there's something resisting, the jump, so it resists. Now that's called a resistance. Now the lower, like I said, now is called a support. This is the support, and then now this is the resistance. I can't repeat this again. Support, down is a support, then up is the resistance. So the market moves, let's say this is where the market is. So I'm sorry about that, guys. So the market will move from the support. So when the market moves from the support, it tries to target the previous resistance. So like I say, it's moving in a waveform. It goes up, goes down, up, down, up, down, up. Good. Sorry about that. Let me try. Let me start again. Up, down, up, down, up, down, up. Good. So this is what I'm talking about. So now when the market's down here, it means that it's going to target the previous high, which is the previous resistance. This line are just deep above here. So that means if this resistance is not broken, you know, if it proves to be hard, like I said, if you hit your head to the ceiling of your car, that means you will be pushed back down. So now the market will try to go back to the previous support. That is if it meets a resistance, that is if it doesn't break the resistance, that is what's happening. Okay, but let me delete everything now. Let me delete this. Okay, let me now draw that once again. Boom. Wow. Okay, good. So let's start. I said up, down, up, down, up, down, up, down, like that, like that, like that, like that. Good. So like I said before, if it doesn't break this resistance, the market will try to go back to the previous support to see if the support is weak enough to be broken on the downside. Now if it breaks this support, that means the market will go down, come back to resist, to retest. You know, let me now tell you one thing amazing. Do not be confused. That means if it breaks the previous support, it means this support will now act as a resistance. I repeat, guys, if the market breaks the support turns to a resistance. So that means the market is going to form another support below. Nice. So as you can see now, if it breaks this previous support over here, this is going to be a resistance. If it breaks this support over here, the support turns to a resistance. Likewise, let's see, that is if it went and broke. Okay, so if the market breaks this resistance over here, that means this resistance is going to turn to be a support. I hope you're not confused, guys. Okay, I said if the market breaks the support turns to a resistance, and if the market breaks the resistance turns to be a support. Okay, good. Now that was called the technical analysis. Okay, now the technical analysis is still deep. So practically this is what I'm talking about. Okay, so like I said, the market moves in a wave. Look at this: up, down, up, down, up, down, up, down, up, just like that. You see? So let me delete that to clean that. Now remember the lines that I just told you about, the support and the resistance thing. Yes, you can see I drew a line over here. Now this was a support. The market came back, retested. Now it proved to be stronger, and now as you can see, this remain the support. Now it's going to target the previous high, of which over here, the previous high, that should be the resistance. So this market, this is how it let me extend this. That's good. Okay, let me extend this. Good. So sorry about that. Look at this. Boom. Boom. You see how it has been playing around the resistance and the support zone. You see? Sorry about that, guys. Let me change the color to this. Make it clean. I don't know if you can see that. Which color? Nope. Let me use the okay, let me just use red. So you can see this up, down, boom. Good. So you can see the market the market went and retested the resistance. Then now the resistance was not broken, it came back to this line, that is the support. The market came back, retested, did not break. Now it went back to retest the previous high, that is the previous resistance. Did not break the previous resistance, now came back to retest again the support. Did not break the support, now is going back to retest the previous resistance. That being said, if it breaks the previous resistance over here, if it breaks this, I'm anticipating it's going to go up. So it has to break, come back for a retest. It doesn't break the support. Now remember, it was a resistance. Now if it breaks it, it will become a support. Now if it doesn't break the support, sorry guys, the market is going to continue moving up. Okay, simple as that. So that's how it moves. Now good. I'll be making also another video to enter into details on the entry. We have the sniper entries, you know, we have different shapes, the patterns that the market usually form. For example, this shape is called that the market form, this is called a flag. So you can see it looks like a flag. Yeah, you can see, boom. My drawing, guys, my drawing. Yeah, so let me zoom in out. So you can see it looks like a flag. Let me do this. You see, flag. That's a flag. So we have different patterns and how you can interpret them. Good. So that is the technical analysis. Now we have also the fundamental analysis, and that now is all about the news. We have different news website like the investing.com, you know, Factory, Bloomberg, you know. So those are just fundamental. Like I said before, fundamentals is just about the news. Okay, so let me see what that was technical analysis. Good. Now we have something called the Japanese candlesticks. So these things are called candlesticks. The things that you are seeing over here, we have this blue and the black one. So they are called the Japanese candlesticks. You know, over here we have the candlesticks. We have hollow. There are different types of candlesticks. We have hollow candlesticks. We have the line. You know, we have Heiki Nashi. This is how it looks like. You know, and we have the Renko. We have. Let me just a minute. Let me show you how. That's how the Renko looks like. Okay, then we have the line break, but we're not going to use these types of candlestick. We're only going to use the Japanese candlestick. That's what has been used for the previous centuries in the forex market. Okay, good. So let me now enter into the Japanese candlestick. Right, Japanese candlestick. So we have Each candlestick has its meaning and interpretation, and has different name. Okay, we have Marubuzu, we have Dragonfly, we have Evening Stars, and I'm going to show you. Okay. Okay. So let's start. What are Japanese candlestick? Okay. So what's Japanese candle? Japanese candlestick can be used for any time frame, whether it be on a day, 1 hour, 30, whatever. They are used to describe the price action during the given time frame. The candlestick are formed using the open, high, low, and close of the chosen time period. If the close is above the open, then hollow candlestick displayed as white is drawn. You get that? If the close is above the open, then a hollow candlestick shall displayed as white is drawn. If the close is below, then if the close is below the open, then a filled candlestick shall displayed as black. Okay, the hollow or filled section of the candlestick is called the real body or the body. The thin lines, these lines over here, these spikes, above and below, these above here and these below, okay, display the high-low range and are called shadows. Okay, the top of the upper shadow is the high and the bottom, the lower shadow, is the low. So what is the Japanese candlestick anatomy? So let's break the different parts of the Japanese candlestick. Okay, right. So long white Japanese candlesticks show strong buying pressures, like this one, the long. Okay, now let me just say these long blues, these long blues. This shows strong buying pressure. Okay, so those are strong buying pressure. While the candlestick then further the longer the candles, the longer these blue candlesticks, the further the close is above the open. Okay, it indicates that the price increased considerably from open to close and buyers were aggressive. In other words, the bulls were kicking the bears big time. Okay, so these long black filled candlesticks show strong selling pressure. These ones, this long black, let me show you more. This one, for example, look at this. This is a long one. This is a long black Japanese candlestick. They show selling pressure that is very strong. The longer the black Japanese candlestick, the further the close is below the open. It indicates that the price fell a great deal from the open and the sellers were aggressive. In other words, the bears were grabbing the bulls by their horns. Okay, right. So we have long shadows. Look at this. Look at these. Okay, look at these. Now these long shadows, we have long upper shadow. Look at this. Now the wick, we call them wick. Then long lower shadow. For example, this line over here. Okay, now those are called long lower shadows. If a Japanese candlestick has a long upper shadow and a short lower shadow that I just showed you, it means that buyers flexed their muscle and bid prices higher. But for one reason or another, sellers came in and drove price back down to end the session back near its open price. Look at this. This is what I'm talking about. So this candlestick over here once looked like this. Okay, it had full body, but now sellers came in, drove the buyers or the bulls down back to the opening price. Okay, if a Japanese candlestick has a long lower shadow and a short upper shadow, this means that the sellers flashed their wash balls up and forced the price lower. But for one reason or another, buyers came in and drove price back up to end the session back near its open, like this. Yeah, like this, for example. So the candlestick came, the price came down, but now the buyers push the price back up. Okay, let me show you another one. Same as this came down, then the buyers took control once again. Okay, so what are the basic Japanese candlesticks patterns? We have something called spinning tops. The Japanese candlesticks with the long upper shadow, long lower shadow, and a small real bodies are called the spinning tops. The color of the real body is not very important. The spinning top pattern indicates the indecision between the buyers and the sellers. Indecision. So let me show you about these spinning tops. Look at this. This, you see, there was that indecision. This candlesticks over here, as you can see. Okay, the small real body shows little movement from open to close. Okay, and the shadows indicate that both buyers and sellers were fighting, but nobody could gain their upper hand. Nice. Then we have the marubuzu, this one over here. Okay, marubuzu sounds like some kind of voodoo magic. Okay, fortunately marubuzu means there are no shadows from the bodies. Okay, very strong. Let me show you a clean marubuzu, no shadow. Like this is still marubuzu. Look at this one, this one, this one. Great. So this candlestick, depending on whether the candlestick body is filled or hollow, the high and the low are the same as it's open or closed. Okay, so a black marubuzu contains a long black body with no shadow. The open equals the high and the close equals the low. You know, this means that the candle opened at its high price, like this one, open at its high price here, and it's a very bearish candle, as it shows that sellers control the price action and entire session. It usually implies bearish continuation or bearish reversal. Okay, depending on where marubuzu is located and what color it is. Great. Good. Okay, so those are now just now let me talk about the doji. We have a doji candlestick. It has the same open and close price, or at least their bodies are extremely short. A doji should have a small body that appears as a thin line. Okay, doji candles suggest indecision or a struggle for tough positioning between buyers and sellers. Prices move above and below the open price during the session, but close at or very near the open price. Neither buyers nor sellers were able to gain control, and the result was essentially a draw. These are four. There are four doji special types. Okay, there's four special doji types. Okay, so we have the long-legged doji. Long-legged doji. Let me now here there are so many dojis. Okay, so let me start with the long-legged doji. Long-legged doji looks like a plus, like this. It looks like a plus. So that's called the long-legged doji. Then we have the dragonfly, like I say. So this is let me look for one. Okay, this is also a long-legged doji over here. Then now this is a dragonfly, or an inverted dragonfly. This one, this one, that's the dragonfly. We have this one too, and those are now inverted. Nice. So we also have this dragonfly. Now it's inverted. Okay, there's so many dragonfly. Boom. Those are now called the dragonfly, but now inverted. But now the one that's not inverted should be like this, like a T, for example. Okay, So it's called an inverted dragonfly or a gravestone doji, right? So when a doji forms on your chart, pay special attention to the preceding candlestick. If a doji forms after a series of candlesticks with long hollow bodies like marubozu, that's the green or the blue, the doji signals that the buyers are becoming exhausted and weakening. In order for the price to continue rising, more buyers are needed, but there aren't any more sellers. Okay, good. That being said, let me look at something else. Let me check out my list. Okay, that was chapter 2. Now chapter 3, that was chapter 3. I just covered the support and resistance levels in the Japanese candlestick. Then we have the Fibonacci. Now these are just tools to help you during your technical analysis. The Fibonacci retracement tool. Good. Fibonacci, you have the Fibonacci moving average, popular chart indicators. So let me start by looking at the Fibonacci retracement tool over here. So this is how it looks like. Okay, let me not confuse you guys more. Just give basics. Those are just indicators. Let me not confuse. Let me just give you the basics that at least can help you trade the forex market. Now, strictly the fundamental analysis. Okay. So let's now dive in deeply on how to analyze this forex market, the technical analysis. Okay. Let me take a look at a certain pair. We have the Euro AUD. Right. So this is called the daily. Okay. This is the daily. As you can see, the price has been moving down. The price has been trending down. That means it's bearish. Okay. If the price had been moving up like the previous, like this, that means the market is bullish. Okay. So up is bullish, down is bearish. Good. So now that we know that the price or the market has been moving down, so we only look for sells. So when the market's moving up, we look for buys. When the market is moving down, we only look for sales. Okay. So now that the daily has showed us that it's moving down, so we now start looking for sell entries. Now we go down to the 4-hour chart. Okay. So this is the trade that I took yesterday. Okay. Remember, I just taught you about the support and the resistance. So this is the resistance, this is the 4-hour, and now we have this down over here called support. So this is the resistance, this is the support. We also have a certain support over here. Okay. There was also a support over here, so you can see I just drew this. So this is the trade that I took yesterday. So how did I make this entry? Okay, there are so many support and resistance. So the market was currently consolidating, and when I say consolidating, that means the market is trading sideways. Okay, that zone over here. So the market goes up, goes down, up, down. So immediately I saw this market had broken the previous support over here. Now let me show you the 1-hour chart. Now we're just looking for our entry. Okay, look at this line now. So when this market First was a break, now went back for a retest. Remember, I told you this: break, a retest, then now it faked. There was a fake out, boom, boom. So when I saw this great candlestick, like I said, we have the Marubuzu thing that I was talking about, that one. That's a great indication of the seller's pressure. With that being said, I took my sell entry. Okay, now I targeted the previous low over here, that was around 47 pips. As you can see, this the profit, take profit was smashed. But now also this is also another good entry, because I was anticipating that the market will go down. As you can see, it went down. Then I'm anticipating for a retest. Then now more selling pressure. Good. So I should be making more entry actually right away. Let me do that. Let me sell this, guys. Just a minute. Just a minute. Just a minute. This is the Euro AUD. Just a minute. Just a minute, guys. Now using my MetaTrader 4. So I'm going to take this sell over here. Now great. So this should be my entry. Boom. Then I should target the previous low, which that was the support, 64 pips. Then now making my stop loss should be the previous high. Now that I'm selling, all the previous week. So you can see there was this. Let me remove that. Over here, this week, that's where I'm going to make my stop loss, above it over there. Okay. So that's the stop loss. Too tight, 15 pips. Great. So good. Just made that entry, and my stop loss should be 0 point. These numbers over here, I mean 1 point, sorry about that, 1.45977, and now my take profit should be 1.4, 1.45, 147. Good. Just have to excuse me, guys. I need to also send the signal to my Forex group. Okay. My Forex channel. Let me send that signal to my students too. Okay. Just a minute, guys. Okay. Pip. Top loss. Good. Good. So right. So let's proceed. Where was we? Now that is how the entries done. So that's the hourly. You can also go down to the 15 minutes time frame and check what's happening. Okay, remember, if you don't see your pattern, do not trade. Okay, the market has to move up, down in a waveform. If that doesn't happen, that's just a consolidation. Do not trade, because there will be so much noise. Okay, good. So what next? Let me see. Let me give you one more example. Okay, we have 1 minute strategy. 1 minute strategy. Let me look for any pair. So like I said before, we start with the higher time frame. So this particular case, I'm looking at the daily. So nothing much has been happening. This is still consolidation now. Just looking at the daily. Let me look at another pair. Like I said before, no trade, no pattern, no trade. Okay, good. So nice. So you can see this. The market had been moving up quite some time. Okay, let me remove this. So we have this support over here. We had a resistance over here. So how could we make entry? So 4 hour, let's see. Oh, okay, nice. You see, then back to the hourly time frame. Good, nice. Let's look at the 15 minutes. Good. Then what about the 5 and the, like I said, now we're looking at the, I want to teach you the 1 minute time frame. Now we know that the market has been trending up. So this is the 5. So now let's go back to the 1 minute. You see, good. Where are the candlesticks? And they're not loading. Sorry guys. Okay. Here we go. What's happening? Okay. So now that we know that the trend is upward, we're now looking at 1 minute time frame, so that we can now make the buy entry. Okay. The candlesticks. What's happening in this trading view? What's happening? I wonder. Okay. Here we go. Sorry about that guys. I'm looking at. Okay. So like I said before, we are only looking at buys. Like I said once again, market has to go up, come down, up, down, like that, and vice versa. So now that we were only looking for buy, so how could we have made our entry? So now the market pushed up, now formed resistance over here. Okay, so that means after this resistance is broken, we need a retest. Okay, after it breaks this resistance over here, after it breaks it, we need a retest, and now a bullish candlestick to go up. So let me zoom in. Okay, so boom, there was this retest over here. Now look at this rejection, boom. So look at this candlestick strong. Now we could have taken our entry over here after the candlestick had closed. so it closed down below around this zone. Then made stop loss should have been the previous week over here, that's around 13 pips, and then now target the previous side, which that should have been, let me see, let me now go back to the higher time frame. So we had this high over here, that 47 pips, and it was smashed, and as you can see the market has really moved up so high, you see. So no problem, either way. If you missed the entry, you can still wait for a retest. Okay, now some rejection, then now go long on this. So if you miss this entry, you can wait for a retest over there, then now after it breaks over here, then now you can make your entry, make your stop loss below the previous low over here. That's then okay, let's say boom, over there, previous low, this one over here, then now target, can target this once again. Let's see, then that's around 247 pips. That's how forex market is traded. So easy, guys. And I think I will be uploading ideas each and every time, analysis, you know, along the way. It's for free, guys, you know. And I think that's all, guys. So maybe show some love, and show your support by smashing the like button, smashing the subscribe button. I will highly appreciate it. It's good for the YouTube algorithm, you know. And at least you can share this video with your friend, guys. So see you next time. Until next time, adios.